And you have MGAs like ourselves, which is we're really going after all things catastrophe. So meaning really your natural events. So we're starting with wildfire. And so that's what we're doing as an MGA. And we are looking to actually insure homes. In fact, our slogan is making the world more insurable. And so that when we do stand by that, and that's what we want to do. And when it comes to our other side of the business, which is Property Guardian, that's really our analytics side of the business, is where other individuals like myself, other firefighters like myself, live, where we do not just loss control. We also utilize wildfire technology to understand wildfire risk.
Welcome to the All Things Wildfire podcast, where we delve into the latest trends and hot topics in protecting properties against wildfire. So sit back, relax, and join us as we arm you against disaster.
Welcome back, everyone, to another session of All Things Wildfire. Mr. Paul Brady, my friend, I've known you here now for, I don't know, it's been probably about a year, maybe a little over a year and a half. So let's just jump right in, Paul, right? You're part of Green Shield Risk Solutions. And with the recent Palisades fires that just took place, there's so much going on in this insurance world that I can tell you, I know you've been busy. We've been busy with this. I feel like it was a cataclysmic event. It was amazingly incredible what took place. And it produced so much activity for everyone. And so we're jumping back in here with All Things Wildfire to get people up to speed as to what's taking place. And Paul, like your firm is on the leading edge of being able to come up with some solutions for this. But let's just jump right in, Paul. Tell us a little bit about you, and then jump into what Green Shield does.
Yeah, definitely. And first off, really appreciate you having me on the show. Name's Paul Brady, head of wildfire insights and mitigation here at Green Shield Risk. For all of you watching, my background is it's a little unique for being in the insurance sector. So my background comes from multiple hotshot crews and engines over a decade with the United States Forest Service. After that, I moved into AIG, where I was a wildfire mitigation specialist. And then after that, with their private client group, helping their underwriters understand wildfire risk when it comes to their high net worth and ultra high net worth homes. And then moved into AIG programs where I helped stand up their wildfire practice across the United States as well as Canada. So that's a little
really quick. Let me just pause there, man, because this is pretty unique, right? Like, I see insurance people as like insurance geeks, right? No disrespect. I love geeks. I think it's all good, right? But oftentimes it's hard to bridge real life activity as to what's going on with the boots on the ground, and then try to bridge the two where you have either, you have policy, say you have some technology, and you have contracts. Like it's hard to bridge those two. But it sounds like, based on your pedigree, it sounds like you got both of those kind of tied together. How has that uniquely positioned you when you got from the hotshot crews, you go over to AIG? Like, let me just slow it down there a little bit. You get to AIG, which was a big behemoth company, still is, and what was the challenge to get the insurance world to understand a little bit more about what really happens on the ground with regards to wildfire? Can you talk a little bit about that?
Yeah. So my first time within AIG, or just within the insurance sector, kind of getting my feet wet, when it comes to insurance. I'll say, I guess I'm half geek as well. So when it comes,
I get it.
It comes to, the wildfire technology and all that stuff, I love that stuff, and love really kind of getting into the data of things and really understanding it. But when I first came to the insurance sector, there was this large gap in the insurance industry when it comes to understanding wildfire risk. The models within the insurance industry in general are not as mature as the other perils. So you'll have the other perils like the flood risk or even convective storm, or you kind of name it. There is there's a lot of technology does really well when it comes to those perils. When it comes to wildfire risk and really understanding wildfire risk, there's a big gap in what I noticed. There was a big gap immediately within the insurance industry. And how I knew that is, we did everything off a wildfire score, and it was, a score between 0 and 100. And if you fell between this level, then you're immediately accepted. And if you fall into this level, and you're immediately declined. And if you fall into the middle, well, then we figure it out. And they use people like myself. AIG did. I will say they are definitely, forward thinkers when it comes to let's get some expertise in the house to really understand wildfire risk. And so they would utilize us to kind of navigate that gray area, if you will. But still really, what they gave us is a wildfire risk score and a location on a map. And I will look at the risk score and say, okay, this is a 70. Great. It's literally just a number. And then I would go into actually diagnosing it like a firefighter would. What would a fire do in this area? What kind of mitigation should they have in place? What does the structure look like? What does the parcel look like? Are they in a canyon? Is this in a Santa Ana wind event area? When was the last fire history in this area? And kind of go down the rabbit hole and say, okay, this is what we think about the risk. And so they were utilizing at the time 18 of us to be able to do this and kind of diagnose the properties one by one and do loss control and make mitigation recommendations, but also help out their underwriters. So that was my first time getting my feet wet. And the first thing I thought was, insurance companies are losing a lot of money. And the best we have is a score that's a number, and then whatever my opinion is. And so that's immediately I start going, well, that's a big gap because not everybody has someone like me within the insurance industries. And so I said, okay, so everybody else is just reliant on that score. After that, I moved into AIG programs where I helped stand up their wildfire practice. And really there was no wildfire loss control, throughout that area. And so I was there to really help stand it up and think about, when it comes to wildfire risk, it was how do we understand wildfire risk across the landscape when it comes to large commercial, everything from ski resorts to casinos to HOA communities, you kind of name it, over thousands of acres, over hundreds of buildings. How do we understand it? And then how do we mitigate against it? So immediately now we're going to large scale mitigation, and immediately we're not looking at one structure, an isolated event. We're looking at what is it going to do to the entire community. And how much of that community is actually at risk from being impacted directly from possible flame, and all of it's going to be impacted by ember fallout if it's in a wildfire prone area.
Got it. And then Paul, what are your thoughts I do want to jump into more of what you're doing now, but what are your thoughts as to why the carriers, and I'm just kind of lumping most carriers into this statement, but why do you think for other perils like flood, why has that technology advanced, and why have they invested there, and why hasn't the wildfire advanced? Is it because there's more dollar value damage in floods versus wildfire, and maybe wildfire wasn't happening as frequently as floods were that happened every single year? Do you have any thoughts around that?
Yeah, wildfire is just more difficult, to be honest. So wildfire is just more difficult. When you're thinking about wildfire in general, I'll give you an example. A flood, you look at how high the water is going to go, and you say, okay, is the structure built up higher than that water line? Are they on stilts? Think about, Florida. Are they on stilts? Are we, and then also we can model that. When it comes to wildfire, it's an ever-changing event. It's not something that is so stagnant like a flood. So flood, you go, okay, we're looking at the channels, we're looking at how high the surges can get, and kind of going through that side of things. And what is a big thing is what is the bottom floor elevation of the home? What is that at, and where is the water going to go to? Versus when you think about wildfire, the vegetation burns up and grows back. And wildfire behaviors is in basic wildfire class will teach you wildfire behaviors based on three things: topography, weather, and fuels. And those three things control the behavior of the fire itself. But the issue with that is those are very dynamic elements. Maybe not the topography, but the weather is.
Yeah.
You can be in an area like where you get Santa Ana wind events, like you said, the Palisade Fire, or the Woolsey Fire. You kind of name it within that region, or the Eden Fire. I've fought fire really in Southern California my entire career, and you kind of name the fires all the way heading back to 2007 when I was in Southern California, or even your Diablo wind event fires within Northern California, or your Chinook fires within Colorado, or you kind of go on and on and on because it's more dynamic. Then you have microsystems that get pushed through these areas, and so it's very difficult to model. And what I mean by microsystem, you may have a narrow canyon that is going to speed up weather within that area. And so that particular structure that's within that canyon is going to have a different experience than a structure further away. And so what it comes down to, I'll give you an example. You said the Palisade Fire. The Palisade Fire, you take the Palisade Fire, you have all these structures, very close together. You have an area that hasn't burned since 1978, which was the Mandeville Fire, really within that area. So you have chaparral that's going to be at least, 11, 12 feet tall. It's going to put off 100-foot flame lengths as it kind of comes down the hillside. Then that's just the vegetation. As soon as it gets into the structures, that is also going to put off an enormous amount of heat. That is also going to put off a large amount of ember fallout. That is also going to burn into other structures. And so being able to model that, being able to say this is what is going to unfold is extremely difficult to do. I will give you an example. If a flood wipes out a structure, does it change the environment? The answer is not really. It's that structure goes away. When a fire gets into the community, it actually changes the behavior of the fire. And it goes from vegetation burning to now entire buildings burning. And that building is a larger fuel source, which is going to make more embers and actually more heat than what grass would do. So it's a lot more difficult to model than when it comes to the other elements when it's just segmented, just the weather or just water kind of flowing through topography.
Paul, I appreciate your description there because just you describing it absolutely solidifies how much more difficult it is to be able to identify what damages are going to be caused by wildfire. Because, you're right. You've got vegetation is one thing, but, I live in a tract home area, and the distance between my neighbors to the left and right are maybe 15 feet at the most.
Yeah.
And so I'm vulnerable because of them too, right? And so then I have to make sure that, they're doing their part to keep heat, embers, flames away from their property. And so, it's so hard. And then when you see what's happened, with the Eden Fire community wiped out, same thing with the Palisades, just communities are wiped out. I'll share this quick story. We had, and we thought the lady was over exaggerating, but we were spraying fire retardant on the day of the event in Palisades, one of our clients' home. We're spraying the vegetation, and the neighbor comes around and she talks to our firefighters and says, "Hey guys, would you guys mind coming to my home afterwards?" And so the guys call me and say, "Hey OP, we have enough product. Can we go?" I said, "Yep, just call me when you're done there." And they finished up, and then they called and said, "Hey OP, the strangest thing, the smoke is getting more intense here." And the lady says to me, "Guys, I'm not going to hire you after all. Okay. I'm going to evacuate. You should leave too. The fire is too close." And she was pretty frantic. And, my guys are former firefighters. So they're like, "Oh, okay. We see the smoke. It's all good. No big deal." That whole area got wiped out, completely wiped out. And when you think about it going from home to home to home to home, man, you talk about the amount of heat that is being projected from those areas. Yeah. And I share with some customers when they talk about well, do I really need to be concerned about 0 to 5? What big deal is it if I have vegetation here? And I let them know that, the radiant heat alone could break a window. And when I let them know, if you've ever been to a campfire and you get to this place where you're a little too close, and you just back up because okay, that was a little too close. You can feel the heat, right? And so when people understand that concept, they realize when you have an entire building in flames, the radiant heat is going to be significant enough where you need to be you need to clear out, right? And so thank you for describing what you did, because it really doesn't lend itself to realize how unpredictable it is, and especially with the winds going back and forth, east and west, north and south. Incredible what took place. So Paul, I don't want to skip on anything that you're offering, because I know that you do a couple things here, but with your technology, are you guys able to assist in increasing the ability of the predictability, and how is your software different? And I'll let you just kind of unpack that for us.
Yeah, definitely. Green Shield, which is an MGA, and for those of you that don't know what an MGA is, it's a small insurance carrier is the best way to explain it. It's a small insurance carrier, not the big box. What you imagine AIG is. We're smaller, we're more niche, we're more nimble, and we're also experts in our area. So you'll have MGAs that are expert in ski resorts. You have MGAs that are experts in just resorts in general, and you have MGAs like ourselves, which is we're really going after all things catastrophe. So meaning really your natural events. So we're starting with wildfire, and so that's what we're doing as an MGA, and we are looking to actually insure homes. In fact, our slogan is making the world more insurable, and so and we do stand by that, and that's what we want to do. And when it comes to our other side of the business, which is Property Guardian, that's really our analytics side of the business, is where other individuals like myself, other firefighters like myself, live, where we do not just loss control. We also utilize wildfire technology to understand wildfire risk in really a dynamic way. And so when it comes to our technology that we're utilizing, we're bringing in from all over. So we're utilizing the most updated aerial imagery to be able to capture the roof. We're utilizing the most updated fuel models. We are even tapping into partners like we have with, for example, Techno Silva, utilized by CAL FIRE, to do wildfire propagation and modeling around the structure itself to be able to really understand the wildfire environment to the next level. That's something that's actually never been done within the insurance industry before, is to propagate wildfire. And something to really kind of take note of is something that is done really well and not done well anywhere. It's actually not done anywhere, whether it be in the fire service, whether it be in the insurance industry, not done well anywhere. I mean, why wildfire is actually so hard is vegetation is easy to, I wouldn't say easy to model, but is modelable. So you're able to actually model it. Structures, you cannot. You cannot model what a structure would do when it catches on fire very well. So what you have is, you'll be able to paint the hillside, whether it be green is good or red is bad. You'll be able to paint the hillside, but as soon as you start hitting that community, you can't say, well, if this structure were to catch, this next one is going to ignite. That's very difficult to do at scale across the landscape. Imagine lower 48 wide. It's very difficult to do because models actually just pick up the vegetation. And that's what wildfire models do today. In fact, if you look at the F-bands, even in the fire service, they're modeling vegetation.
Right.
You look at the insurance industry, they're modeling vegetation. And they're kind of buffering out the vegetation and saying this is a high risk area. So what we're doing within Property Guardian is we're taking a lot of information and putting it together, and then we're making our own models, and we're also making our own methodologies to get a 360 view of wildfire risk. So we will look at areas like the Palisades and say, okay, let's look at the Palisades. Yes, the vegetation is very high risk, and everyone kind of knew that. But how far is it going? Our Ember fallout model said, oh, it's going to go all the way to the ocean.
Really?
Yeah. So it shows it goes all the way to the ocean. And then it goes, okay, well, Ember fallout will happen all the way to the ocean during a Santa Ana wind event. Okay, well, now that we know that, what do we look at the community itself? And so when we look at the community, because we're using the most updated aerial imagery, we're looking at defensible space. Our defensible space, at least within our parcel risk assessment, says high risk from structure to structure ignition because of how much buildings are within that 100 feet defensible space. Looking at the models, it was well above 20% of everybody's structure. 20% of that 100-foot area was other buildings. And so it was above that across the board throughout the Palisades. That's not including all the intermix of vegetation. That's not including, and we have all our models actually saying high vegetation, high building density. connecting all that stuff together and then putting it in front of experts and being able to really build this with a firefighter point of view is what we're starting to build it's not what we're starting to build, it's what we built for the insurance industry. In fact, we're getting utilized today across multiple carriers, utilizing our product to understand wildfire risks, to really start deep diving, what about this gray area? Because I always say this, when it comes to, insurance companies exiting the market, if you will, you're going to exit for two things. You're going to exit, one, if you're not profitable, if what you're doing is just not working, or if you don't understand it. If you don't understand it, and I say, hey, because you have the reinsurance carriers as well in the background saying, how are you spending my money?
Right.
And so you have that in the background. And so if you can't tell them that, I believe that I should be writing this risk because of X, Y, and Z, well, then you don't really know what you're doing and you're guessing. And guessing and hoping is not a good way to go about it. So bringing really the data and the expertise together to really understand wildfire risk, to be able to give those answers to any of the stakeholders that is really within your business is what we're doing.
Wow. So Paul, let me ask you from a homeowner standpoint. You've got I know the brokers listening here probably know you, carriers probably know you, but the real estate agents listening may not know you. The homeowners may not know you, and the fire department may not know you. HOAs listening don't know you. Like who could call you, right? There are some times where companies will say, oh, well, we don't work for the individual, and I totally get it. I'm just trying to understand how this would work. Would a end user be able to contact your company, or would they have to utilize you through a carrier? How does this work at this point?
Yeah, so no, you can actually order a report off our website. So you can order a report off our website and kind of see your wildfire risk. When it comes to really understanding wildfire risk in general and understanding it at the homeowner point of view, right now we're mainly utilized by carriers, but we are looking to enter into the community areas and looking now that we kind of built what we have. We're not looking to keep it all in-house. We're not looking to say, okay, we made this magic sauce where we can really understand wildfire risk and we're going to only keep this within the insurance industry. No, we are looking to actually make it more tangible to the communities, more tangible to the homeowners, to really be that transparency behind it. So a wildfire, it goes back to a wildfire risk score of 70, if you will, or a wildfire risk score of whatever. That's not a very transparent number. There's a lot of elements where you just talked about a little bit about how complex wildfire risk is. You'll have some wildfire scores. I always say this: if you take 10 models and you run one location, you're going to get 10 different answers if it's a wildfire model. That's not because they're bad models, it's because they weigh things differently. One might weigh wildfire frequency in that area really high. One might weigh certain vegetation really high. And so you get all these scores kind of up and down, throughout the insurance industry, and kind of wherever you can use multiple scores to kind of build that view of risk. But when it comes to a homeowner trying to understand, where do I really stand? And that's exactly where the insurance industry is actually sitting as well. They're looking at all these models and going, where does this person stand? So what we're doing here is really trying to connect the two. Is we're making a model that is transparent, that says you have a wildfire risk score of this, and these are the elements why. And this is exactly where you stand. And to be honest, and this is where the hard conversation happens, and this might be outside your control, but this is where you stand. Because sometimes it is outside your control.
Okay. So if I get a wildfire score, are you going to give me some recommendations? It sounds like on
Absolutely, yeah.
Okay, and you might say, hey, OP, 0 to 5. Would you suggest that? Like hey, get rid of vegetation 0 to 5, or is that not part of? Because I know that's been a big push here in the recent years, and now it's becoming more prominent, but didn't know if that was part of your score.
Yeah, so the 0 to 5 is we do look at the 0 to 5. We do look at the defensible space around the building itself. We are looking to get more granular, if you will, because we are utilizing aerial imagery. These images come from planes. So I'm not going to be able to see the bark mulch right at the base from a technology standpoint. I might be able to see it with my eyes if I'm looking at the photo. But from a technology standpoint, picking all that up, how we actually do our scoring is we score off the structure itself. We score the parcel, so surrounding 100 feet around the property itself. Then we score the community, really the entire community that you're in. And then we score the region, the entire area that you're in. Then we also do the wildfire propagation modeling around your property and do 100 simulations really within a 5-mile radius of your property. And we take about 20 years of weather. And this is through our partner TechnoSilva. So we take 20 years of weather and we simulate it at the 99th percentile. So we simulate that Santa Ana wind event. It said, how many of those wildfires would be able to get within 300 feet of your property? Where did they come from? How fast were they moving? What was the probability of them reaching your property? And be able to answer a lot of these questions for you. So that is really if you will, our core report. We're also doing some other active stuff, like we're actively monitoring and propagating wildfires that are actively happening, and seeing what is the impact. What is the impact to the insurance portfolio on that side of the business? So what is the impact to the entire portfolio that you currently have, and is there things that you can do to mitigate against that?
Interesting. Okay.
Well, I was just going to say, from a mitigation standpoint, so I'm also an NFPA certified wildfire mitigation specialist. I'm also an ISA arborist. So no, we do care heavily about that 5-foot area, just because we know the damage that it would actually cause for the homeowners to not actually care about it.
Yeah, no, absolutely. Thank you for sharing. I was just thinking, like, you'd give me some recommendations, some things that I could do likely. And I'm just going to, arbitrarily say it's probably vegetation management, some ember resistant events, I would imagine. But when you say there might be some things out of my control, is it because it's the distance now that's being measured from?
Yeah. So when it comes to, and that's the hard truths, and that's honestly when it comes to us all coming together and doing something that makes a difference in an entire community, is more impactful than one individual. When it comes to, I will give you example, the Palisade location. If you're in the middle of the block and you took out, you could practically touch both walls, if you will, if you stand between you and your neighbor. And you took out your Italian cypresses there and said, okay, I can my due diligence. The whole block is still going to go because everybody didn't do their due diligence.
Right.
So this is where reality meets, where really reality meets, what's going to unfold is you can't sit there and have a perception of, if I do everything that's in my power, then I am safe. That's not true. And that's the hard conversation to have, where you can say, I can do everything in my power. I can get ember and flame resistant venting. I can make sure that I have dual pane glass. I'm going to enclose my eaves. I'm going to make sure it's non-combustible roof and siding. In fact, I have a bay window. I'm going to enclose underneath of that as well. And, stucco all the way down to the ground. I'm going to have nothing but concrete. In fact, I'm not going to have any grass. I'm just going to concrete everything around me. And I'm going to put concrete walls, and I'm going to replace all my wood fences. And it's going to be the picture perfect IBHS. The NFPA is going to come.
Come on, Paul, give me some hope.
Yeah, it's going to be great. But the reality is you're 10 feet away from a structure that is just looks like a tinderbox. That is still within your 100-foot area. And there's a reason why you draw that 100-foot area, is because that's what's going to impact your property.
Boom. Okay. Let's dig in here a little bit. HOAs. We get a lot of calls from communities. Part of, when they reach out, they're like, hey, we really need to get this community up to speed. So one of the first things they do is they become a Firewise community, okay, which I think is fantastic. It's great.
That's great, yes.
And underwriters tend to love that. And I think, though, beyond that, if HOAs can hire a firm like yours to be able to design what the community impact would look like, man, I think that would be a powerful visual for the board of directors in the HOA, the decision makers, to really have a better understanding on the impact. And you're right, because I have an IBHS home, right? I'm good. I'm still afraid of what my neighbors potential is of their vegetation and their homes igniting. So I'm 100% with you. But I think that as a community, we have to have this broader knowledge and it's still sense of urgency to realize like we don't want our communities to have to suffer. Like, let us please learn from the things that have just taken place, right? And a question I have for you, Paul, is do the underwriters, like, do they look at this and just go, boom, I'm convinced, yeah, Paul, this makes sense, yep. I have enough support to provide the coverage, or are the underwriters still wrestling with the understanding of whether they should or whether they shouldn't? I'm just trying to figure out how we can help communities. And I know it's not easy, but do 1 through 10, and then you increase your chances to get coverage, because coverage is becoming a major problem.
Well, I could tell you this. So there's some good news in kind of the what you said. So one is the Firewise community designation does count. Some of the models, not all the models, but some of the models actually take that in consideration. There is secondary factors when they're looking at your loss ratios. Really, to kind of easy way of putting what loss ratio is a model comes and it simulates what would be the impact of putting this property on your portfolio. How much loss are you going to take over the years for having this property? And so it's obviously all simulation, and it says, okay, you are either going to make money or you're going to lose money on being able to charge them this much premium. If you were to have that Firewise community and you were to put that into that model, it would say, oh, because it doesn't know anything about the structure, it doesn't know anything about a lot of things unless you tell it. It will say, oh, the loss ratios are now lower, which means that could be the difference of you actually getting insurance or not getting insurance. They might say, hey, now that I put this secondary modifier within this model, this makes sense to actually put on my portfolio. This makes sense to actually, now the premium I'm going to charge is going to be worth it. Versus I'm taking a loss on this property if I put it on my books. So why am I going to do it? Why am I going to take a loss? So yes, no, they do take that into consideration. So one is getting that designation does matter, is kind of the punchline, if you will.
Got it.
When it comes to a community effort, I will go back to one of the first things I said is vegetation is captured. Reducing a large amount of vegetation in the community, even surrounding the community, will change the models eventually. It's not going to be instantaneous. You're not going to wipe out all the vegetation and all of a sudden the models are going to say something different. What's going to happen is these models are updated. Some of them are poor. Some of them are going to update it once every 4 years, but some of them update yearly. And so being able to actually wipe out a large amount of vegetation in between the structures and surrounding the community itself, lowering that vegetation down in, like, let's say grass, which I'm sure, areas like the Palisades would have benefited if everything was grass. But if you were to lower it down to that standard, I'm not saying wipe out all trees and all that stuff. Obviously you can limb them and do all this stuff, but I'm saying just good mitigation, good healthy forest, if you will, around the property. The models will eventually pick that up because it's picked up by satellite. But that's the key point, is it's picked up by satellite. You can't just move your bark mulch and think that the model's going to change. But if you do large scale mitigation around the community, if you do large mitigation within the community, if you make standard practices that a large amount of vegetation is not allowed in between the structures itself, and the 0 to 5 really does matter, that would look different from a satellite image. And therefore, it would actually translate to the models differently as well. And it will say that there is low vegetation in this area, the risk scores would go down within that area.
Interesting. I love that. I think, there's such when the renewals start to hit us as homeowners, and, they're all going to hit at different times of the year. I have State Farm, and I don't know if they're going to renew me or not. I have no idea what's about to happen. But I had a California Fair Plan when I first bought the home 5 years ago, and I did the best I could to get out of that as fast as I could. So when it came time for renewal, I was like, IBHS, let me get, take care of a bunch of things. And then State Farm identified the IBHS work that I did around the home and said, hey, we're going to grant you insurance. And I was very grateful. But now with the industry shaking so much more, I don't know what's going to happen. And one of the things, Paul, that is shocking to me is we have I have a client that told me about his other client, broker, has an insured. There was a $70+ million property that burnt down in the Palisades. They had the FAIR plan, and the limit of the FAIR plan is, what is it? Is it 3 million?
3 million.
Yeah. And so you talk about devastation.
Oh,
And
no.
so the owner is asking, okay, I'm trying to understand, Mr. Broker, should I actually rebuild and then make up my money there because I lost so much, and they're going to rebuild for X amount of dollars, they're going to be able to sell X, you're going to be able to make some money. And if I do that, the question is, when I sell, will I be able to have it insured? Will the person I'm selling to, are they going to be able to get insurance, or is the insurability only $3 million, right? So all these questions start to come up as to, like, what am I going to do with this, beautiful lot of land that supposedly is worth a lot of money, but if it's uninsurable, what's really the value, right? Any thoughts around that?
Yeah. So when it comes to the hard, and I definitely feel for that individual when it comes to insurance, especially if you have a home over $3 million. That for everybody watching, that means it was self-insured. That means that literally a pocketbook loss of possibly millions, which is terrible. But when it comes to not only that, if you were to build it back and the other person can't get insurance for it, that means they have to self-insure it because they're not going to be able to get a loan for uninsured property. So the banks, they have their own regulations where they say, where it says, hey, if this property is worth X amount of money, I'm only going to loan you the amount that you can actually get insured, because I'm not going to loan you $1 million that's uninsured, and if the property takes a loss, I'm not getting my money. And so that runs into another problem where if that person were to build it back, it would have to not be the California Fair Plan, or it would have to be an all cash buyer that is willing to take the risk that your friend took, which is, am I going to just self-insure the rest of it, or is there maybe stacks I can put on top of the Fair Plan? Which is stacks, meaning other insurance companies willing to kind of come on top of the Fair Plan, and you can kind of manipulate it, if you will, and kind of say, hey, I have 3 insurance companies covering this house, if you will, all coming in to cover the house to get the whole value there. But if you're self-insuring and no one else wants to play in that market, and it's over $3 million, it's just bad news, and it'll be difficult to rebuild it and have it worth more than $3 million, and then just know that it's going to be difficult to actually get that loan for the next person that's trying to buy it.
Yeah, good point. And I think for people listening, you might think, oh, that example is just out of the ordinary, and who has that kind of money? But, the Palisades has many, 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 many $5 million properties, right? Mm-hmm. If we could bring it back down to earth a little bit, even that's a little high, but let's just say $5 million. The homeowner's getting $3 million. That's it. Right. And so now, like, they still have to make a decision whether they're going to rebuild or what they're going to do. And so you have these people that are selling their lots, and there's just so much chaos going on. And for you listeners, if you know of anyone that's lost their home and it's, valued over what the insurance company, specifically the Fair Plan, has paid, we'd love to hear about it so we can actually see if we can have discussions around that, because there's a lot of pain out there right now that I think if people were to hear some of these stories, they might think twice about looking and opening up their policy themselves right now to really make some different decisions to see what they can do to prepare themselves to avoid this kind of a devastation. So I encourage you guys, reach out to us and let us know if you know anyone that's suffered through that. But one of the other thoughts, Paul, it just kind of came to mind, is Frank Freevault, who I've interviewed in the past. He's with the WUI. What is he with, Vincent? Do you remember? Uh, he does quite a bit of research, put it that way, for the wildland urban interface. And he had mentioned, he and I were talking, he says, OP, I see a bigger problem coming that's not being talked about. And he started talking about the mortgages, right? So to your point, people are insured, but if the mortgage companies decide, I'm not going to provide a loan for that because it's too risky, or there's not enough insurability for that property, who's going to buy the property? Who's going to buy the house, right? He was just talking about like the possibilities of a chain reaction taking place in the real estate market, and I wonder what that would look like.
Yeah, so something interesting, and everyone's always talking about, can we adjust these models? Can we play with these models? The answer is you could. I'll give you an example, and then I'll answer the question. The Palisade fire is going to come back as a low risk in the future for a time. And so
explain that. I know what you mean, but I want other people to hear about this.
So all the vegetation is burned up. And so the satellite images that I've been talking about, there is nothing left. I mean, it nuked the area. It's moonscaped. It burned so hot that even the larger vegetation turned to ash. There's not even sticks. You can just kind of walk across the landscape, if you will. And so what's going to happen is the models are going to pick up there's no fuel in the area, and therefore the risk is going to be very low. And so I always find it interesting is like, what would it take to lower these models? How do I lower these models? Large mitigation lowers the models.
Right.
If you don't believe it, then that's the perfect example. A wildfire blows through the area. I know modelers, since I was talking to them in confidence, I won't say their names, but I know models that actually lower risk scores for the period of about 4 to 5 years in areas that recently burned, because they're trying to keep up faster than even the satellites update. And then the satellites will update it and goes to whatever score that's going to be. But large mitigation does work when it comes to lowering wildfire risk scores. The problem is we don't do large scale mitigation, not at that level. We do large fuel breaks. Fuel breaks, while they work, fuel breaks work. I come from the fire service. Fuel breaks do work. Embers travel over them, but fuel breaks do stop the forward progression of a fire. It doesn't change the model because all the vegetation on the other side of that fuel break is continuing to grow and die in Southern California and get bigger and bigger and bigger. And it's really skyrocketing the models in those areas. Now, when it comes to what you're talking about, when it comes to the real estate market, yes, 100%. In order for you to go in escrow, there's people falling out of escrow because they just can't get the loan. And so really making sure that when you're going into that house, is this a California Fair Plan house? Is this an admitted house, meaning that's low wildfire risk score, or is this a house that is going to be a non-admitted, meaning that insurance carriers are playing in the area. For example, your State Farm I'm guessing is a non-admitted. Insurance carriers are playing in the area. It's just not in the admitted market, kind of Wild West, being able to charge what they're wanting to charge in that area. Then you have the admitted, which is kind of regulated by the CDI within your area, and that is going to be more favorable pricing than the non-admitted. And then the worst of it would be the California Fair Plan, meaning everybody told you no. And now you're going on to the California Fair Plan. Actually knowing that going in when you're buying a house is really important. And years ago, that wasn't really a thing. Like, I bought 2 houses before, and I wasn't going, is this a non-admitted house or is this a California Fair Plan house? Like, that wasn't a thing. Right. 2018 kind of changed that. 2018, you had the Woolsey fire around that time, and then I guess it was 2017, which would be the Camp Fire. And those 2 fires upended the market, and what ended up happening is billions of dollars were lost and low wildfire risk scores burned down. Immediately, we don't know what we're doing in the market. Immediately, knee-jerk reaction to kind of, I need to understand my landscape a little better, so I'm going to pull back. I'm going to caution, because I'm looking to place bets, and I want to, because it really is, it's a betting game. The insurance company is betting that your home's not going to burn down, and you're trying to be a partner with them to make sure your home doesn't burn down because you don't want it to burn But if they feel that they're making a bad bet, they don't want to insure you. If they don't understand their bet, they don't want to insure you. But that's what's happening. People are now falling out of escrow. People are now falling out of escrow because insurance companies don't want to make that bet anymore. And so therefore the mortgage companies are saying, absolutely not. I'm not giving you a loan that's uninsured.
Yeah. I think with your firm, you're helping the insurance companies better understand their bet.
We're making a product just for the real estate market, so even better.
Well, you are.
Yeah, to come.
Wow. Okay. That's powerful. I think, look, the more products that are out there to be able to help all the different facets of what we're doing. Sure, insurance is one aspect of it, right? But you're right. If you're going to buy a home or even sell a home, right, you want to be able to understand that you're going to be able to get the value that you, at least that you put into the property, and not actually be afraid to sell because you're not equipped.
Yeah.
So
Yeah,
fantastic.
absolutely.
Paul, is there anything else that you want to touch on? You and I earlier talked about a little bit about wholesale. I'm not sure if you wanted to tap into that.
Yeah, so Green Shield also has a third leg of their stool. So our MGA is going to be standing up a high value homeowner product, which is going to be really between that $3 million and $10 million dollar house, where we're going to try to make, well, we're not going to try, we're going to make the world more insurable because we're going to go out there and insure homes. We also have our another side of the business, which is going to be our wholesale. And so what we're doing, we're currently wholesaling today. So what that is we'll take business that even doesn't fit our MGA, and we'll actually wholesale it into other insurance companies. So we do have that side of business as well. It's not just if you don't fit in the Green Shield, I guess, risk metrics or risk appetite when it comes to our product offering. There's no hope. We're even wholesaling into the market, placing them with other insurance companies.
Gotcha. Fantastic. I think the more that companies like yours can get the word out to the carriers as options, the more options we have, right? That some carrier out there is going to be able to look at us more favorably. And Paul, is there anything else that you wanted to share before I ask you the last question?
No, go for it. Ask the last.
Sure. Okay. So, I know that you have a crystal ball, so I want to ask you this question. So, I think you made a very powerful statement. I think it's so true that the carriers that are going to insure in the Palisades for the next couple of years, their risk is lower, much lower than it's ever been.
Correct.
And so hopefully the carriers can see that and provide insurance for the homeowners that are rebuilding and the people that are trying to start their lives over again. But this market, this insurance market and this wildfire market, to your point earlier, not only in California, but Colorado, Montana, it is spreading rapidly, the impact of what wildfire does. And so, and I'm trying to think, when are we going to get some normalcy back, right? So I don't have any, false belief that the industry is going to change in 2025. I don't even think it's going to change 26. I don't know. But I would hope that within the next couple of years, there's some sort of regulation, maybe not even regulation, but there's some sort of equalizer of balance that comes back where we're like, okay, everyone's been able to figure it out. Yes, prices may have to be higher, but not as crazy high as they are now. Where do you see, and do you see this balancing equilibrium coming back? When do you see that potentially happening, or do you not see that happening?
I think we'll get there. Do I think we're going to be there in the next year and a half? That's a long shot in my opinion, but I think we'll get there. When we have, and I'll kind of throw some stuff out that kind of catches everybody off guard. When you see stuff like the Lahaina fire happen in Hawaii that burns up an entire community off an offshore wind event, or when you see the east side of Canada on fire that's socking in New York, I think that was last year, that actually happening. And when you see a 1 million acre fire burning across the state of Texas, when you start seeing all these events, really what ends up happening is everywhere starts becoming a wildfire prone area. And you have to, you can't just say in California, this is where we're going to adopt mitigation standards. No, wildfire mitigation standards should be adopted where wildfires happen. So if you're in a wildfire prone state, really, everything that we always, at least I say, west of the Mississippi River and over, and in the state of Florida, I'm not saying Hawaii all of a sudden needs to start cutting down everything within 100 feet of their structures. But I'm saying that, these things do happen and we should have a plan. When the insurance companies start having confidence in the communities, that you can't expect, and I will say this, you can't expect entire towns to be burned down and saying the insurance company, you're the bad guy for not insuring it.
Right.
Why? So they can take large losses. In their minds, if they weren't in the Palisades, they're a winner. They were smart enough to avoid it. And if they were in the Palisades, they were a loser because they didn't see it coming. They placed their bets and their chips in the wrong pot. But if you can convince them off reality, of what actually happens, when the communities start coming together, and it does happen at the communities, if the communities start coming together and a fire happens and it doesn't burn up the city, during a large Santa Ana wind event, during a Diablo wind event, during a Chinook in Colorado, when that starts to happen and it was like, hey, look, our mitigation does work. Our large fuel reduction around the community does work. Everyone is adopting these standards and they do work. Insurance companies will feel more comfortable about placing their bets because they're going to say, hey, this community actually is making it work. And there is now proven track record of this actually working. Right now, we can't even agree on mitigation standards. You have IBHF, you have the NFPA, you have the CDI, you have all kinds of stuff. And literally, if you want to even go this route, if you ever thought about it this way, you have all these insurance companies, and all these insurance companies also have their own mitigation standards that they stand by.
Right.
So we can't even agree on mitigation standards. When we can start standardizing something that works, and that will start bringing insurance back into the market.
Mr. Paul Brady, that was well said, and thank you, brother, for making the time to sit with us today. I think there's a lot of good information here. And for those of you listening, well, let me ask you, Paul, where could they reach you guys at? You talked about your website and where they can get their assessment, but what's the website you would share?
Yeah, so I'll put the website in the description, but we're a Green Shield Risk Solutions. You can look us up. We're a Wildfire MGA, like I said. Property Guardian, we do have our own domain for Property Guardian, which is a Green Shield company. So if you look up Property Guardian, a Green Shield company will come up, and that's where you can find us. And you can order a report. You can get an assessment done on your community. We're actively looking at how we can enter into that market. We built a lot of stuff in-house. The insurance companies love what we're doing, but we're also looking at making the world more insurable. We're also looking to give back. So if there's a way that we can help you in your community, if there's a way that we can help you individually, and then also if you're an insurance company wanting to understand what happens if I fall in that gray area, because that's where we get utilized mostly. I fall in that gray area. I don't really understand this risk. I got that wildfire score of 70. I don't know enough. We can help you understand it, and hopefully we can help you pick some of those good risk in bad states.
Boom. Paul, thank you so much, my friend. Really appreciate your time.
Yes.
Take care, brother.
Appreciate you having me.
That's all for this episode of All Things Wildfire. If you like this episode, be sure to subscribe to our show and follow us on social media to stay up to date on all things wildfire. And as always, thanks for listening.